Good evening, everyone. Today is Monday, April the 10th. My name is Anne-Marie Band, and this is the Leeloo Level Up Evening Report with a look at the day and what trading might look like in the overnight and in the day tomorrow. We've got charts by Motive Wave, we've got analytics by TradyTix, and of course, our data comes to you from Leeloo Trading, where we live more and trade less. So, stock market summary today, we did have bullish momentum after the early morning dips. From about 10 o'clock, things kept moving upward, particularly in the Qs. And overall, we had ourselves a fairly mixed day. And so the mixed day really tells us exactly what we're looking at right now. We've got the CPI on Wednesday, and that means nobody's really positioning for anything very big. Sectors leading the way today: industrials, energy, materials, real estate, interestingly, consumer discretionary. These are all risk-on events. These down here, particularly staples, healthcare, and utilities, are more risk-off. And so what we have forming ahead is still bullish motion on the pullback, but we had a lot of choppy, light volume trading. So let's jump right into the futures. Again, the platform here is by Motive Wave. Take a look at what we did. We came into the low. I expected us to hit 40.95. We did not. We came into maybe 40, what is that level? Low 40.98.75, and then it immediately began to bounce. Traders really are looking to try to hold this range, but take a look. 1, 2, 3, 4, 5, 6. This was the 7th day sitting in the formation. Do we have lower highs? Yes. Do we have lower lows? No. What's going on with our delta? Our cumulative delta is getting a little bit lighter, but we don't have any trend here per se, other than this sideways notion. So the delta diminishing isn't going to be that big of a deal. The open interest, I don't have the numbers on them yet. They should come fairly soon. April 7th had open interest of 2.2 million. When we get the totals here from the CME website, I'll be able to see whether it's diminishing or not. I think everybody's still waiting on the sidelines, and there are a lot of people positioning negative into this CPI number. If the CPI number is light, this chart is going to rocket further with a likely test of 41.71. Hard to say, but we'll see what happens in the mix. What do we need to look for in the overnight? If we can hold above 43, it means that we're going to try and hit 47 and then 53, 54, all the way up to 71. And a lot of people are actually calling well above 4,200 before we stall out again. I'm really not sure. I'm just trying to follow the chart. For the Qs did the same sort of thing, pulling off of these ranges. Take a look right here. Again, diminishing cumulative delta, overall diminishing delta. And what do we have? A series of lower highs, but the fact that support is holding will really tend to be bullish motion. So what are we looking for? We're looking for the loss of maybe this 13,100 area to look for bearish momentum to take us down into 12,967 and potentially more if it loses that edge, but I don't think so. If it holds or breaks above 13,197, 13,200, we know that it's going to try and break into 13,236, all the way up to 13,262. I suspect overnight is going to be quiet unless we have some dreadful news. If overnight is quiet and we are looking at lower highs but a hold of support, pullbacks are going to be buy zones across the board. One of the things that's holding tremendously well is the diamonds, the Dow, right? And so if we look at the Dow minis here, we can see that we're holding these edges right at resistance, 33,780. We break above that, we're going to push into 33,884, 34,000 potentially. up into this congestion zone. That is what's next. And then, of course, 34,135, 34,175 on the upside. So what's the trade? Pullbacks are buy zones. Look at how hard support is holding. So you can wait and position here and say, hey, listen, I'm going to go long if it comes into 33,540. And I know that I can maybe have my stop a little bit tighter than normal coming into this range, but I would wait for it to come in, take the long, and then hold on. Our open close delta was fairly similar here, and so we've got a good sideways motion. If we take a look at the RTY, right, this is where regional banks are sitting, and so it is showing up as a little bit weaker, but also holding support, and that is going to be the next step in the horizon. And so what we want to look for, break above 1790. We're going to see if it can get to 1810. If it loses this area at 1781, like it did earlier today, it's going to give us shorting events into the support areas around 1750, at which point we have to cut and run because we really are moving in sideways formations right now. This is really, don't think about the markets being trending. They are not sitting in trending environments. Let's take a look at oil. Oil, after this very big bounce up into heavy congestion, we've stalled 1, 2, 3, 4, 5 days sitting in this range. We just read that Russia is, along with the Saudis, are delivering oil to the Asian nations, and at the same time they're saying, hey, listen, we've got curbs on any kind of exports to the Western markets. So you can see a clear divide here. Something is going on. Here's the storyboard. As long as we hold 79, all the bounces are going to be buy zones with the sell point anywhere between 80.50 and 81.20. That's really what we have to look at. Anything up in the 81.20 area, $81.20, going to be a shorting event into this area. If we break 79, that means we easily could fill in the gap. Could we break 79? I don't know. My thought is there's a lot of upward pressure in the market, and my suspicion is that if I were the administration in an election cycle, I would certainly be doing everything I could in a back channel perspective to keep oil down, because if oil does not go down, that CPI is going to creep up. If the CPI creeps up and inflation is not trounced, they're going to continue to raise rates, and it's going to be a rough go for the markets. Lastly, we take a look at gold. Gold did, are we in the M contract? Yes. Gold did a tremendous amount of movement. Are we in the M contract? That doesn't seem right. Are we in M or K? Let's take a look. J. J? Yeah. Let's go to the J and see if it's rolled. J3. No, we are definitely in the M because I know we're over 2000. Okay, so taking a look at gold, what we're seeing is that we had a really big bounce, and now we're sort of coming in, old resistance being new support. Bitcoin had a big, huge move up above, I think, 29,000 today. So we're looking at market action that is really looking at alternate currencies, as it were. And so as we take a look at gold, here's what we're looking at. Pullbacks, going to be buy zones, but this thing has been running at one mighty clip. And so we really have to think about what is legitimate for a pullback in this environment. What I'm going to do is really very quickly, I'm going to put Fibonacci up. And let's see. Oopsie. Let's see what this Fibonacci gives us. Yeah, so if we have 100% retracement, it comes to 1975. Excuse me, if we come back to the 100% retracement, look, right now we're almost coming into that 150 area. This pullback is very likely. I think that gold is tremendously overheated. And it could easily give us a fade back into the breakout area. I say, hang on, go a little steady here. And if you haven't gone long gold, now's probably not the time to stay long. But I will say this, as long as you hold 1996 and you get up above this 2008, it's long into the highs or a lower high, at which point you want to cut and run, because right now we have high, low, lower high, lower low, lower high, lower low. So we do have continued downside formations. Hey, thanks for giving me the few moments here. This has been the Leeloo Level Up for the evening hours, and I'll see you all on Wednesday.